Welcome, everyone, and thank you for joining us today. My name is Kendall Duncan, Product Analyst here at VanEck. I'm pleased to announce this timely webinar hosted by Senior Product Manager Andrew Musgraves on the evolving landscape of rare earth elements. Rare earths power some of the most essential high-growth sectors, from defense and clean energy to advanced technology. Yet access to these materials has long been dominated by Chinese-controlled supply chains. That dynamic is now shifting. Today's session will explore the role of rare earths in national security and next-gen technology, highlight how the U.S. is reshaping the supply chain, and explore how to access rare earth miners. We strongly encourage questions throughout the webinar, so please submit in the Q&A window located at the bottom of your screen. We are going to walk through some prepared slides up front, and then we will get to the Q&A. So VanEck has a distinguished decades-long track record in managing natural resources equity strategies, with industry recognition as a pioneer and innovator in the space. The firm manages over $35 billion in assets focused on natural resources, equities, commodities, and gold, offering investors deep expertise and access to diverse resource-related exposures. VanEck is home to one of the longest-running gold mining funds globally, with an over 50-year track record. So with that, I'll hand it over to Andrew to dive in.
Thanks, Kendall, and thanks to everyone for joining us. We're excited to have you with us today to talk about a topic that's making headlines everywhere and that we're really passionate about as a firm. So over the next 15 minutes or so, we want to take you through what we believe rare earths and strategic metals are, and they're not just a niche topic for metal specialists, but a critical and timely theme for generalist investors like many of you here today. So to set the stage, we've laid out the big points, the key takeaways here for you. First, rare earth and strategic metals are, we believe, sort of the hidden backbone of modern technology. They're essential to everything from clean energy to advanced defense systems, to even the phone in your pocket or the headphones on your ears. They're sort of quietly making the modern world work. Secondly, security of supply is becoming a defining challenge. We're seeing geopolitical risks, particularly China's market dominance, combined with environmental, logistical constraints to kind of create some real vulnerabilities. And really, it's not just about economics anymore. It's about it's about national security and energy transition and maintaining technology leadership. So third, governments, particularly the US, are making big coordinated moves to revive their supply chains. And we're going to show you some concrete examples of how that's unfolding and the billions of dollars in investment, partnership, international collaboration that's taking place. And finally, this isn't just a macroeconomic or geopolitical conversation. There's an investable opportunity here, right? VanEck offers one of the few liquid pure play ways to access this through to access rare earths and strategic metals through our rare earths and strategic metals ETF, REMX. So let's make sure we're kind of all speaking the same language first, right? Rare earth elements are a very specific group of metals, 17 in total on the periodic table. You've probably heard of some of these names in passing: neodymium, dysprosium, terbium. These aren't the sorts of metals that you would buy at a local hardware store, but without them, much of the modern technology simply wouldn't function. They're often split into two categories, which we haven't identified here, but light rare earth elements, or LREEs, and heavy rare earth elements, HREEs. The heavy ones are generally harder to find. They occur in lower concentrations or more complex to separate. And that's why they kind of often get sort of a higher strategic importance, command a higher strategic importance. Strategic metals, sort of a broader category, goes beyond rare earths. It includes things like lithium, cobalt, tungsten, titanium, metals deemed sort of critical by various governments for economic or national reasons. And definitions vary here, right? For example, some countries include copper, nickel, or zinc. The index REMX tracks does not, because those markets are more commoditized and industrial in nature. So now that we know which metals we're talking about specifically, let's take a look at what makes them so important, right? Many of them are very common in nature, actually. So geochemically speaking, some rare earths are more abundant than copper, but they don't occur in large, concentrated deposits. Instead, they're scattered, making extraction and processing expensive and labor intensive. And they're also concentrated in a handful of producing regions like China, the DRC, Australia, a few others. So if a major producer slows exports or changes their policy, it kind of creates global supply crunches almost overnight. And processing is another hurdle here, separating, refining these elements. It's not like refining other metals where you can kind of easily separate it from other rocks or ores and smelt it down and pour it into a bar or ingot. It's really chemically complex and it requires expertise to extract, and it can create some pretty toxic byproducts. Environmental rules kind of in a lot of these developed countries actually make it prohibitively expensive, which is why much of the refining happens in places with less stringent regulations. And their physical properties are pretty unique, right? The things like magnetic strength and heat resistance and light transmission efficiency. You can't just swap in something like steel or aluminum and get the same result. And sort of all this is to say that their role is foundational across multiple sectors. And without them, our clean energy systems would be less efficient. Our defense capabilities would be weaker. Many consumer electronics would be bulkier, slower, simply they wouldn't exist. All right, so here's where it gets really tangible. Let's kind of take a look at where these materials show up. In clean energy, rare earths are inside wind turbines. They make electric vehicle motors lighter and more efficient. They're in grid scale batteries that allow us to store renewable energy for when the sun isn't shining or the wind isn't blowing. They even play a role in nuclear energy, including SMRs, small modular reactors, which are being developed as kind of the next generation of clean baseload power. In aerospace and defense, night vision optics, drones, jets, an F-35 fighter actually contains over 900 pounds of rare earths, a Navy destroyer over 5,200 pounds of rare earths, and a submarine more than 9,200 pounds of rare earths. So without these materials, you can't build these systems at current performance levels. In consumer tech, the phone in your pocket, the headphones you wear to the gym, the flat screen TV in your living room, they all rely on rare earth and strategic metals. And this list isn't exhaustive either. It's just to show a few of the metals. It doesn't capture every single metal or application that we're talking about. For example, healthcare, it's another major sector that relies on these materials, and everything from MRI machines to X-ray systems to precision surgical equipment. It all depends on rare earths and strategic metals. And also not noted here, right? Magnets are sort of the common denominator, right? Rare earth magnets make motors and systems across clean energy and aerospace and defense, and consumer electronics a lot lighter, smaller, and more efficient. So again, without them, these technologies would be a lot heavier, bulkier, less capable. They potentially compromise everything from EV range to jet agility to smartphone performance. Now, why does supply security dominate this conversation? Well, because China controls over 90% of rare earth production and refining, and more than 70% of key strategic metals like cobalt and lithium. Again, we haven't listed every single metal here, just a few to try to kind of give you a flavor. And that dominance is on a scale that few commodities have actually ever really seen. It's important to remember, though, that China didn't get there overnight either, right? They achieved this dominance through several levers. For example, through centralization, by consolidating mines into sort of these state-owned giants, controlling production quotas and prices, through vertical integration, sort of these mine to magnet manufacturing processes, and also through things like subsidies by funding sort of costly refining processes that Western firms weren't really willing to take on. And finally, by permitting, right? By allowing extraction with fewer environmental restrictions to kind of lower the overall cost and speed up these projects. And they've demonstrated that they're willing to use their position that they've gained strategically through time. For example, in response to US tariffs this year, China imposed new export restriction on certain rare earths. And exporters now have to apply for permits and disclose sort of sensitive information about end users to their government. And these moves have already slowed supply chains and sent certain metal prices sharply higher. The same thing happened in 2010, actually. Added to that, China's largest battery manufacturer just this week, CATL, was forced to close its largest lithium mine, sort of with the government further attempting to constrain supply of these strategic metals. But the stakes are higher now because global reliance on these metals has grown. So countries are actually finally starting to take some action. So how are they reacting? Well, the good news is that they're moving quickly to try and diversify supply, governments and corporations alike. But China has shown building the supply chain for these materials isn't just like flipping on a switch. It can be sort of a multi-year endeavor and very, very capital-intensive work. In the US, one of the flagship efforts involves a company, MP Materials, which is currently REMX's largest holding. MP Materials operates the Mountain Pass mine in California, which is currently one of the only rare earth mining and processing sites of scale in North America. The Department of Defense invested $400 million into MP Materials, plus a $150 million loan, agreeing on sort of a decade-long floor price and offtake agreement to help sort of scale their magnet production. And it's more about mining, more about just mining too. It's about building sort of this downstream capability to turn rare earths into finished magnets for EV motors, defense systems, and electronics. Apple also pledged again with MP Materials a $500 million for its US-made rare earths magnets. Alongside of this, they've also agreed to the co-development of recycling and manufacturing facilities in Texas and California. And in Europe, the EU's Critical Raw Minerals Act, which was enacted in 2024, a relatively ambitious goal of targeting 10% of demand from domestic mining, 40% from processing, and 25% from recycling by 2030. It's a pretty comprehensive framework. It covers 47 projects, funded across 13 countries, totaling around $26 billion. And the list goes on here. We could go through every single one of them. Australia's National Reconstruction Fund, putting 130 million US dollars into one of the few non-Chinese integrated rare earth mines and refineries in their country. Japan, India, UK, the South Korea, they're all funding overseas mining stakes, building refining capacity, and stockpiling critical minerals. And whether this will be enough to reduce the dependence on China is unclear at this point. These projects will obviously take years to bear fruit. In the meantime, China remains the dominant player, while the US and Australia now stand as the world's second and fourth largest producers of rare earths. So let's just take a quick look at the demand side. We're looking at sort of steady compounding growth, about 2.6% annually in rare earths, about 2.2% annually in cobalt, 7.5% annually in lithium. Lithium's kind of faster growth rate tied to EV adoption and battery storage. But even the slower growing categories like rare earths and cobalt, they're still adding significant incremental demand each year. And I think what's important to note here is that these forecasts don't even include potential new uses. If we get breakthroughs in energy storage, robotics, or aerospace tech, demand could always accelerate further. Substitution is always a risk, of course, but for many applications, especially magnets, there just simply isn't a substitute today that can match current performance. So how do investors actually get exposure to this space? Well, buying the underlying metals isn't feasible for most people. Rare earths just aren't traded on commodity exchanges. Most contracts for rare earths are actually negotiated on a bilateral basis between buyers and producers. And lithium futures are kind of still in their infancy. And that's why we launched the VanEck Rare Earth and Strategic Metals ETF, REMX actually back in 2010. It invests in the space in the only other way that is accessible to most generalist investors, and that is through the companies that earn a majority of their revenue from producing, refining, or recycling these materials. And today, the fund is invested across the opportunity set with about 40% in rare earths, 35% in lithium, and the rest spread across various strategic metals as shown there: titanium, vanadium, tungsten, manganese. And the top holdings provide access to all of the major producers of rare earths and strategic metals in companies like MP Materials, which we spoke about earlier, Australian producer Lynas Rare Earths, US lithium producer Albemarle, another Australian lithium miner PLS. And yes, as you see on there, we still have exposure to Chinese producers, not because the index opts to overweight these, but because they remain a significant part, almost unavoidable part of the global supply chain. Really quickly, just a look at the underlying index. REMX tracks the NVIS Global Rare Earth Strategic Metals Index. Strict inclusion rules to kind of keep it pure play. Again, by pure play, we mean companies generating at least 50% of their revenue from the production, refining, or recycling of rare earth and strategic metals. Companies are capped at around an 8% weight. They've got to meet these liquidity and market cap requirements. And the index is reviewed quarterly to ensure that we maintain targeted exposure while still kind of meeting liquidity needs of the ETF investors. So kind of before we close, we want to talk briefly about risks. It's very important to cover with a market like this. First, price and liquidity risk. This is an extremely volatile market. Just this week, lithium prices moved 10 to 15% on a single corporate announcement. Regulatory and geopolitical risks. As we know, policies can shift quickly. New tariffs, change in environmental rules, or maybe an export ban can kind of move prices overnight. Third is equity market risks, right? These are stocks at the end of the day. They're not the metals themselves. And that means that they're subject to the same market cycles, sell-offs, and macro shocks as you might see in broader equity markets. Understanding these risks is crucial, we believe, obviously, for anyone that's looking to invest in the space. So that brings me to the end of my prepared remarks, our prepared remarks. I hope this is kind of giving you a clear understanding of why rare earths and strategic metals matter, not just to the global economy, but to technology, security, and sustainability, and how REMX can provide that targeted exposure to this powerful theme. So with that, let's open it up to some questions.
Thank you, Andrew. A wonderful perspective. So now, yes, we'll move into the Q&A. So I will start by addressing a few of the pre-submitted questions we have received. So first, Andrew, can you talk a little bit about recycling rare earths? Would that be a viable option to aid with supply?
Yeah, thanks. This was a good question because I think it kind of gets at some of the major concerns that these companies have, which is how are we going to be able to ramp up production fully to kind of meet all these demand needs? Certainly the other big question is, can we just focus on recycling? It holds a lot of potential, but we're starting from a very small base. Today, the global recycling market is really only worth a couple $100 million. The environmental benefits there are very obvious, right? It reduces the need for mining, cuts energy use and emissions. It sort of keeps the materials in use rather than kind of in landfills. But the challenges are really, 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 really significant. I think less than 1% of rare earths are recycled. And the sources for those are just sort of end-of-life electronics, magnets, and lighting. And so collection rates on this stuff are pretty low. Permanent magnets, I read, it's less than 15% collection rates right now. So even when you recover those materials as well, the concentrations are super low, and separating them can be really, really costly and technically complex if you think about a recycling operation. So to scale that, we would need to kind of better collection systems and technologies and sort of supportive policy for that. And for now, we'll kind of I would imagine recycling will likely remain a smaller part of the supply chain. Only a few companies, kind of like MP, that are really kind of truly focused on it at scale right now.
Awesome, thank you. Another question that came in was, haven't countries been stockpiling these metals for a while now?
Yeah, this was another good question. So stockpiling efforts just really haven't been enough to kind of offset an outright China ban, right? There's strategic reserves in Japan and South Korea and the US, but they're pretty small, and they're really kind of designed to bridge short-term disruptions, like meaning in terms of months, not years. And so this would soften the blow, but it's really not going to kind of replace ongoing supply. Um, China controls the majority of mining and refining capacity. So if they were to halt exports entirely, stockpiles could buy some time, long enough for alternative sources or recycling to ramp up, like maybe. But most industries would probably face some severe shortages and price spikes. I think the reality is that stockpiling is a buffer, but it's not a long-term substitute for diversified supply chains. Sorry, I saw another question come in here about sovereign wealth fund. So from reading this, the DFC, the Development Finance Corp, I believe. Yeah, so I think that the question asked, do you have any thoughts on the potential sovereign wealth fund? Do you think the DFC will be used as the sovereign wealth fund light? Any view on the upcoming National Defense Authorization Act? So these are sort of relevant but sort of distinct topics in strategic metals. The US doesn't have a sovereign wealth fund. Experts are kind of exploring using mineral royalties and federal leases to create sort of a resource-backed sovereign wealth fund. I think possibly with the DFC acting as a steward there. And that's where the DFC would fit in, right? It kind of is a coordinating agency across energy, defense, interior, and state in support of critical mineral sourcing. But yeah, in regard to the National Defense Authorization Act, I don't know. I think there was some rumors about strategic capital investment, but I think the bill authorizes some broad defense spending for procurement, but there's no sort of public record of how strategic metals would fit into that picture. I think we have a question here about caps on the index at 8% and why MP is at 11.8. Those will be revisited quarterly at the end of the quarter. Those will come back down. Let's see, should we take another one of the earlier questions that we received as well?
Yes, so another question we received was, what's the general supply outlook for lithium?
Okay, so that's a good question, especially in the context of this fund, which has a really high percentage to lithium. Lithium has seen a pretty dramatic price fall over the past several years. They're kind of still digesting a substantial amount of supply build out from the past few years, and it's really kept prices under pressure. Kind of even as we see these long-term demand drivers remain intact. So we could probably still see sort of continued volatility as projects ramp up and work through the system, especially in regions like Australia or South America, where you've seen these really rapid expansions in capacity. I think the other thing to keep in mind is that lithium demand is still expected to grow meaningfully over time, right? Particularly over the next decade. We showed the 7.5% annual compound growth rate because of EV adoption and grid scale storage. But supply additions can kind of temporarily overshoot at any point and create this sort of cyclical price weakness. And so investors, that means the near future could remain relatively choppy. But for us, the long-term structural demand story really hasn't gone away. So.
Awesome, thank you. And then one other one that we received both pre-submitted and again in the Q&A box is, where are rare earths located? Like, where are these reserves really?
Sure. So USGS, they do surveys on this, right? The largest known reserves are heavily concentrated in just a few countries. China obviously leads by a wide margin with about 44 million metric tons, followed by Brazil and India, Australia. Brazil's only about 21 million metric tons. The US is currently around 2 million. But there are some notable discoveries that we've heard of recently. Norway, I think, announced one in 2024, which is about a 9 million metric ton deposit, which would be the largest in Europe. I think in Wyoming, American Rare Earths reported a potentially behemoth discovery, which if it's accurate, would kind of dwarf all noble glown reserves. But China's dominance for now is pretty anchored. It's mine in Inner Mongolia. It's the single largest rare earth deposit in the world, 40 million tons, accounting for about 70% of the world's known reserves. So scale, processing capacity, that's why China continues to dominate.
Awesome. Thank you so much, Andrew. So as we're wrapping up, for any questions we did not address, we will answer them directly afterwards. We encourage you to visit our website for our comprehensive, globally recognized suite of natural resource solutions. And with that being said, I appreciate everyone joining and participating. So thank you and enjoy the rest of your day.
Thank you.